How debt mutual funds are taxed in India. That's our topic for discussion today in the Market Secrets investment series. Before we get into today's session, Market Secrets is proud to announce launch of Algo Traders Program ATP. If you are someone who is interested in learning end-to-end algo trading, then check out our Algo Traders Program. I'll leave the link to it in the description section of this video. And with that note, let's jump into today's session on how debt mutual fund returns are taxed. So first, what is a debt mutual fund? If a mutual fund is investing 35% or more of its corpus into debt components, then it will be classified as debt mutual fund. So obviously it is will be lesser than 35 percentage. Okay, so equity component of the mutual fund will be less than 35 percentage. So it falls into debt mutual fund category. So this is applicable for hybrid fund, which is nothing but balanced funds. So which invest in both equity and debt and rebalance it every now and then, right? So such funds also if falls into this category if their equity exposure is less than 35 percentage. Okay, so these are the two common things that fit into this particular category. Okay, so debt mutual funds and hybrid mutual funds, which is debt focused. Okay, so those two things will have a similar taxation. Okay, now let's come into the taxation part. So this is the definition part. Now let's come into the taxation part. First one is capital gains from this debt mutual funds. So how it is taxed? Earlier, these gains from debt mutual funds were taxed at long-term capital gains of 20 percentage with indexation benefits. Okay, so this was the tax till 2023. Okay, but from April 2023, right? So April 1st, 2023, due to this last year's budget, right? We have lost this indexation benefits. Okay, so that was completely taken away in the last budget. So from April 1, 2023, new rules came into effect. And as per the new rules, all the capital gains from these debt funds will be treated as short-term capital gains and it will be taxed at your slab rate. Okay, so this is what is going to happen from 1st April 2023. But if you have invested in debt mutual funds before this particular cutoff date, your taxation will follow this particular approach. Okay, you can still claim 20 percentage long-term capital gains with indexation benefits, but any investment after this particular date, right, it will be tax treated as any returns from it will be taxed as a STCG and you'll have to pay taxes at your slab rate. Okay, so if you are your new investment, this will be applicable, but for old investments, right, you can still use this particular approach. Okay, but this is a big change when it comes to debt mutual funds because with indexation benefits we have actually paying taxes less than 10 percentage, but now if you are into 30% bracket you'll have to pay 30 percentage of your returns as taxes. So yeah, we lost a major thing in the last budget. Okay, so this is how the capital gains from debt mutual funds are taxed. Now let's talk about the dividends. Okay, so it's straightforward. Any dividends from debt mutual funds are taxed at slab rate. So it's better to avoid dividend mutual funds because even though now the tax slab is same for both the capital gains and dividends, the dividends will be paid by the mutual funds. So you won't get control of when you'll be getting dividends. So if you're someone who is investing for the long term, right, it's better to go with the growth funds than dividend funds, because if you go with the growth funds, right, so you can redeem at the time that you want and only at that time you'll be paying the taxes. But if you go for the dividend route, right, every month, every 3 months, every 6 months or every year the mutual fund might pay you the dividend and then you'll have to pay taxes and you have to reinvest the remaining. So it affects compounding a little bit as well, and on top of that it gives you unnecessary headache. Like if you are someone who is saving for a particular goal, you can redeem it in one shot after 5-10 years and you can submit your taxes. But if you go the dividend route, right, every month they'll be paying, every year they might be paying, so every year you need to submit the relevant tax documents as well. So your taxation every year will get complicated if you go with this route. That's why it's always better to go with the growth funds than going for the dividend funds. So this is how the taxation for debt mutual funds work for both capital gains and dividend part of it. Okay, if you have any queries, comments or feedback about this episode, leave it down in the comment section. I'll be happy to address it. Also hit the like button if you have liked this video and share it with your friends if you find it useful. Also subscribe to our YouTube channel and click the bell icon to get notified whenever whenever we upload a new video or conduct a live session. Thanks for watching. Have a great day. Goodbye.